All right, let's dive into Robert Half's latest earnings report. Now, this one is a fantastic example of how Wall Street and a company's own management team can look at the exact same numbers and come away with two totally different stories. One of those stories sparked an immediate sell-off, while the other suggests a huge turning point is right around the corner. So who's right? Well, let's break it down.
Right off the bat, the market made its decision, and it was pretty brutal. The stock dropped over 4% in after-hours trading. So the big question is, was this a fair reaction to some genuinely bad news? Or was it just a knee-jerk response from people who missed the bigger picture? To figure that out, we got to dig deeper than this headline number.
Okay, so on the surface, this doesn't look like a total disaster, right? I mean, earnings per share came in right on the money, exactly what analysts expected. But, and this is the but that sent a chill through the market, revenue came in just a little light, and more importantly, it was down a full 8% from this time last year. You know, in this market, that year-over-year decline, that's the kind of thing that gets you sent straight to the penalty box, and that's exactly what happened here.
But this is where it gets really interesting, because if you stop at those headline numbers, you're missing the real story, which is this massive tug-of-war happening between two different narratives. And figuring out which story is closer to the truth, well, that's the key to the whole investment thesis.
So, you've got the market, which is laser-focused on the past. It sees that 8% year-over-year drop, it hears about hiring caution, and bam, it hits the sell button. Simple as that. But then you have management, who spent the entire earnings call telling a completely different story. They're trying to get you to look at the future, at what they're calling green shoots, things like stabilizing weekly trends, and this is a big one, really resilient pricing power, with their bill rates actually up almost 4%. So you see the conflict? It's all about backward-looking data versus forward-looking signals.
And it's super important to know where the money's coming from. Their main business, the U.S. staffing division, that's the engine of the car. But their consulting business, Protiviti, that's like the high-octane fuel that really drives profits. So you got to keep an eye on how both of these are doing to really get a handle on the company's health.
All right, let's get to what I think is the most important part of the call, the guidance. This is where management puts their money where their mouth is and tries to prove that their green shoot story is for real. And honestly, what they said was a potential game changer.
13. Just think about that number for a second. For 13 straight quarters, Robert Half has not been able to grow its revenue from one quarter to the next. That's over 3 years of being stuck in a slump. It's pretty much the single biggest reason this stock has been lagging.
So, for any investor looking at this is the million-dollar question, isn't it? After all this time, after 13 quarters, is this finally the turning point? Is this long, painful streak finally about to break?
And management's answer was a pretty clear yes. The guidance they gave for the fourth quarter signals that, yep, they are on track to break that 3-year streak. For an investor, that's a massive deal. It suggests a real, tangible inflection point might actually be here.
Here's a good way to think about it. Imagine the company's been in a car that's been slowing down for a really long time. Well, now it looks like they're finally starting to press the accelerator again. Now, they're not going as fast as they were a year ago. That's that negative 7% year-over-year number you're seeing. But the key point, the one that really matters, is that they're finally moving forward again. The direction has changed.
Okay, so the guidance was definitely the headline. But, you know, sometimes the real gold is buried in the Q&A session. This is where the analysts really get to grill management, and what they had to say was incredibly revealing. Let's just quickly run through these. First up, the dividend. Management said they are very committed to it, which is basically their way of signaling confidence in their future cash flow. Huge. Second, perm placement. Now, this is a key indicator for the whole industry. The fact that it jumps so dramatically for the better is a really positive sign. Then, they explain the pressure on Protiviti's margins, which adds some important color. And finally, AI. They totally push back on the whole AI is taking all the jobs fear, saying they see it as a tool, not a threat, at least for now.
So we've looked at the numbers, we've listened to what management is saying, we've picked apart the Q&A. Now it's time to put it all together and give you our take on what this means for the stock going forward.
Okay, so here's our thesis in a nutshell. We think the market is basically driving by looking in the rearview mirror, while the real opportunity is right in front of us. We believe the company is at a major inflection point. And because the stock has underperformed so badly, it's coiled like a spring for a potential rebound. But, and you know, this is a really big but, it all, and I mean all, comes down to management actually delivering on that Q4 growth promise. If they do, things could look very different. That's why we're starting this off with an outperform rating.
And this quote from the call just says it all, doesn't it? It's a perfect example of the tightrope management is walking. They're not spiking the football or declaring victory yet, but you can hear it in their voice. They are clearly feeling a lot more optimistic than they were just a few months ago. And that kind of cautious optimism, well, that can be a very powerful signal for investors who are looking for a trend to change.
Of course, this is just our breakdown of the situation. As always, you should do your own homework before making any investment decisions. This is not financial advice.